Okay, we are live. What's up, everybody? Welcome
Not the market.
to the show. Yes, Roy and I are both poor, and so we have to do a show today, unfortunately, so that we can capture a solid dollar of ad revenue. And in 12 months or so, we buy a share of SoFi if it stays at this level. But yeah, it was a brutal day. I mean, the good thing is, I've been having a couple of friends text me around how much money they're losing, and I'm like, dude, don't look at it. Like the good thing
Yeah.
about being busy is that you don't have a chance to even see the market. But it is. I'm actually going to open it up in real time, so you're going to see my reaction. Because the last I saw it was like 9 a.m.
Oh boy, don't do it. uh, in what we'll talk about macro tonight, we'll talk about individual names as well. Certainly, we're going to talk about Tesla too. It's not wrong, especially if it's getting to you. Like if you're stoic and you're like, hey, whatever, and there's moves you need to make, by all means. But if you're looking at it and it's the emotions are driving you to want to make decisions and you're actually doing that, best thing you can do is turn off your phone, get away from your phone, get busy with something else that actually matters. But learn from this. Like for some folks, I made a short video on the macro stuff. But for some folks, this is their first big pullback like this. Like they're
Yeah.
really new in the market. They weren't in here the last bear market rather. Bear markets, this is not the bear market, but bear markets are the best teacher. And use times like this to learn whatever lesson you need to learn. Like if you were like, hey, stonks only go up, you've learned that lesson now, hopefully. Unless you're in stocks that I'm not aware of. If you're like, hey, it's great to like leverage all the way up and you got a margin call today, I'm sorry about that, but learn what level of margin, if any, and the amount for most of us is probably zero, or maybe $1,000 if you're using the free Robinhood amount that it's appropriate to use. Be careful with options. Some folks, especially in bull markets, I like options. I like a certain percentage of my portfolio's options. Some folks are like, hey, 100% options. Why would I be messing around with boring equities? Because at times like this, so you can sleep at night, you allow yourself. That's one of the things that we have as retail shareholders. But so hold on, Tevis, what do you think?
Yeah, I checked. I should not have checked. What the fuck?
Yeah. So yeah, we'll get into it. Now look at HIMS though. Look at HIMS.
Yeah, only down 4%.
Like,
I mean, that's not that bad considering the QQQ is down 3.8%.
yeah, HIMS is the most volatile name that we own, and for it to be down only, you should have taken Lisa's advice. Thank you, Lisa. You tried. Good friend there. But for the most volatile name that we own to be down like 4% on a day like this is like, dude, that's amazing.
Yeah.
Now, don't look at Robinhood.
I also own Tesla, and that shit's down 50. Dude, $222? Are you kidding me?
Yeah,
Oh my gosh.
I won't say who because I don't know if he wants us to be public or not. We had this great comment on that Tesla is now trading like a speculative biotech who did not get FDA approval. It's like,
It
yes.
sounds like Steven to me, but it might not be. I don't know.
No, Robinhood was actually the most surprising one, down 20%, and it's been down a lot.
Really?
Now I know there's a correlation to Bitcoin. Yeah, it's like $35 or something like that. I bought a good amount of Robinhood, but
sound more after hours. What is going on?
Yeah.
Wow, SoFi's at $10 after hours, 1081.
By the way, guys, an hour and a half from now, there will be Robinhood Weekly. We'll probably talk, not Tevis and I, he is a shareholder, but we'll talk most Robinhood at that point. This will be more macro, some individual names as well, what we're doing, the reasons for this, when this might end. If you watch my little short video on the macro stuff, this is going to be a more expanded version of that too. And in the last 30 minutes, we'll get into your questions, any that we miss. Doubled in position on Tesla. Well, maybe let's start there, Tevis, Mr. Tesla.
Yeah.
What you've been busy, but what, if anything, have you been buying the last few days? Not just today, but let's say the last week.
I don't think anything.
Anything? Okay.
I think maybe I did like some cash secret. Oh, I did some cash secret puts on hymns for like 2 weeks from now, but yeah, not really anything. I need to find money to buy stuff, man.
And now
So,
we don't have any. So
well, yeah, that's the problem, right? Everything falls at the same time. Holy what the dude? What is going on? Because even after hours is like crazy down.
all right. So let's start there because that way Tevis doesn't freak out and people aren't freaking out.
What the heck?
I've not looked in the last hour. So
Man, that's not good.
this is still a bull market. It doesn't feel like a
Exactly.
bull market, but it is still a bull market. It may be ending. I don't think that it will, but it could be. Definition of a bull market is, well, I won't go there. Definition of bear market is 20% from the top. And so we've not fallen 20%. The S&P 500, we're down in the after hours. It looks like maybe just at negative 10%. After hours doesn't really count, but if it actually closes tomorrow under that, then technically this is a correction. Negative 20% down would be a bear market. Now, the NASDAQ, because it's very tech sensitive, is actually close to that. And that doesn't mean like that it'll never go up or that it'll have multiple year. Really, the best indicator of where we're at is the S&P 500, which is less volatile. So could we pull into a bear market? Yeah, it's possible. I don't think it's particularly likely, but the market is certainly acting that way. Now, let me rewind the clock back to
4%. Ew.
yeah. Well, here, let me throw out some charts here, or not
So yeah,
charts.
while you do that, let me go get a Celsius and get this shit started.
And
Bear
I'm
back.
drinking Monster White today. So extreme fear, that's 15, and if I refresh it, well, it doesn't count after hours, I don't think. And there's a lot of reasons why. But if you remember where we were, let's see, a month ago, we were neutral, 46. And it doesn't go like 2 months ago, but we were in greed or extreme greed, whether that showed it or not. Like if you remember, that was a time in season where everybody was chasing a lot of different plays. They were looking for Grab, Oscar. Those are fine companies, I think, but I wasn't too interested in those. And some other that were like way more speculative. I had people telling me, why invest in boring PayPal? It'll only do a 3x in 5 years. Those are signs of a local top at the very least. And I was like, hey, I'm gonna hedge. Bought some puts on Block. Wish I held those a lot longer. Man, they would have really printed. They printed anyway. But what happens in a bull market when we're in extreme greed mode over here is the market ignores everything negative. It's kind of like if you're dating a new girl, Tevis, and for the first couple of weeks or first couple of months, they can do no wrong. They're wonderful and perfect and awesome. Or new into marriage, it's like you have the perfect spouse. But the honeymoon doesn't last forever.
Yeah.
And there are
You're
times
gonna
and
go extreme
seasons when you
fear.
go from that to extreme fear. And extreme fear, and this is where we're at right now, the
Yeah.
market price is in nothing good. Nothing. It's just everything is negative. Everything is terrible. It's going to go down forever. It's going to remain down forever. All the stocks in the world are going to zero. Google's going to zero. Microsoft's going to zero. Robinhood's going to negative. Palantir somehow will be like negative 3,000.
Yeah.
And the U.S. economy is done. U.S. is done. The world's over. Life's over. That's what it feels like. Don't give in and don't make decisions, by the way, based on emotions. But that's where we're at right now. Now, the market does not stay for long in extreme greed or extreme fear. We'll look at some other indicators too. But what's going to happen is after, and this could take a couple of weeks. I don't think it'll take. Well, we'll talk about that in just a moment. But it'll begin to price in some good news, and then it'll realize, just like when we were over here, it was overreacting to everything good. It's overreacting to everything bad over here too. That doesn't mean that we can't have further downside. B-Dub said we're not there yet. So, well, before we look at charts, and that'll please Danala, any comments on where we're at as far as fear, greed, Tevis?
Yeah. I mean, look, man, if you go with the and yeah, this is the therapy session. If you go with like the most caveman indicator, in the market that's held true throughout this entire time with doing zero extra research and zero extra like homework. If you just make a rule to buy when it's extreme fear and sell when it's extreme greed, you'll do pretty well in timing these things. You won't get the absolute bottom, but you're going to be closer to the bottom than you are not, right? And I do think that, I mean, I freaking hope at this point that we are closer to the bottom than we are not. Like, okay, Tesla gave back its entire move from 220, 230 to 450 or wherever. I think it peaked at like 480. And it gave back that entire move. Can it go under 200? Sure. But under 200 from here is like down another 10%. Like, you have much more upside than you have downside. Can it go to 150? I mean, maybe. Like, the further that it falls down, the harder it is to drag. Like, it's not going to go to freaking zero, on a down. Like, I know it may seem like that sometimes, guys. But again, we're at a 15 on the extreme fear. I think that if you just buy on extreme fear and sell on extreme greed, or at least use those as indicators, then you're going to do fairly well.
All right.
But the problem is nobody has money to buy here.
Well, not exactly true. So, okay, actually, let's back up 1 second before we look at S&P 500, RSI. Do I seem just this? You guys comment on this too, but do I seem more calm this bootleg weekly session or last bootleg weekly session?
What did we talk about last time?
Do you remember how animated I was and frustrated I was at Trump policies and uncertainty and everything?
You've gone through like the 5 stages of grief. You were like anger, denial. Now you're like acceptance in this.
Yes, that's exactly it. Like today, and it helped that it was a pretty steady day. Next 2 days are slammed at work. So if it like goes down to 0, I won't even know it. But yeah, honestly, last week it was frustrating because I should have seen it earlier. And thankfully, like I took some moves and I did some changes last week on Monday because I'm like, hey, this is what we're going to. This is what's happening on the market. We're heading there, and it's not too late for me to shift strategy, even though it's super frustrating. Last week, as a recap, market hates uncertainty, absolutely hates uncertainty. And Donald Trump and his administration has provided the market with a lot of ammo, a lot of uncertainty. And so we have this massive pullback. We would have had one, I think, anyway. It was just at that point where RSI wasn't really overheated, but there was just a lot of greed in the market itself. So this is the year to date in the S&P 500. Volume indicator doesn't matter too much, but this right down here is the RSI, the relative strength index. And I've got it over on the daily interval. So over the 14 last days, basically where we're at as far as strength. When we get to this line right here, it's 30. It's considered oversold. This line up here is 70. It's considered overbought. You can think of this, if you're new to RSI, kind of like a balloon. All right. So a balloon, you can inflate it to a certain point, but what's going to happen if it becomes overinflated?
It's going to pop.
It's either going to pop, or if it's a really tough balloon, you just won't be able to put any more air pressure in there with your mouth at all. And that's what happens with RSI when it goes overbought. It can do that for a lot longer in a bull market. It's kind of like a warm environment. It's a lot more elastic. Now, on the downside, if a balloon becomes, let's say we're letting the air out. Yeah, you think you need a bigger balloon. We need a bigger truck. When all the air comes out of the balloon and it's way oversold, there's a limit to how much air is in there. And so, especially in a bull market, it tends to bounce off the RSI when it hits 30 or thereabouts within a very short time frame, and it can ignore overbought for a little while, but eventually it bounces. So let's zoom out a little bit and take a look here. We can see here, we're right at oversold. We can see, look right here. Look how beautifully that bounced off in August. This is the yin carry day. That was, by the way, a day that I was a buyer. We can see, look right here, how beautiful this was. Bounced, I don't remember what April 19th was, but it was something. We can see that it went slightly below, maybe like 28 or so. Yeah, 28.97 on October 27th, 2023. A little bit below here. We keep going. slightly below here. And you can see RSI as it goes up, then the market goes up as well. That's the reason why the RSI is going up, by the way. There's divergence and stuff. We won't get into that as far as technicals. Now, in a bear market, it can go down a lot lower and for a lot longer too. It just tends to especially in a bull market, have rare times. Now, this is COVID level events. So, like if we had nuclear war, don't expect RSI to hold at 30. It will not. But this is not nuclear war. It is an economic war by according to Warren Buffett. But I mean, you can look at these, and there are certain times where it goes below, but it has to be something really, really turbulent or a bear market. And you can see just how many times it bounces off. So look at it for yourself. But that is an indicator not of this being done completely, but it's an indicator of a local bounce at some point. Now, for the bears will say that this, yep, sure enough, it's going to happen. It's a dead cat bounce that the market maybe will bounce from 558? 10% correction. We're there, guys. We got it. To maybe it'll bounce up to like 590 and then it'll come back down. I actually think that that's what's going to happen. I think that there's more dip to come, but in the short term, I think we're very likely to bounce. Might be, tonight. I feel like it's almost certain this week, barring a further negative catalyst. But I think there's more pain to come. We'll look at that here in just a second. But Tevis, do you use the RSI at all? And
I don't use RSI on the SPY. I'll take a look at it on individual names. I have like 80 and 20 as or like 70-30 sometimes. Look, man, the lowest the RSI can go is 0. Okay, it doesn't go negative, and when it does go to 0, rest assured that it can only go up. It can only go in one direction when it's at 0. But if you pull up that chart again, you'll see that the RSI doesn't really stay that low for a long period of time. And yes, this is a daily chart, but just look at the previous instances here where it's dipped. Like it'll dip and bounce, dip and bounce, dip and bounce. You saw it like on late April there, where it just fell to the very bottom and then bounced. August, same thing. December, same thing. And now, maybe it stays here for, let's say, even another couple of days, maybe even a week, and we see another drawdown in those days. But you don't see any examples here over the last several years where RSI has just stayed at like 10 or 20 for weeks on end. So I mean, if I had to steel man the case, so that's what I would say.
B-Dub says pull up the weekly and monthly. So weekly is not a bad indicator. Monthly, not too many people actually look at that. Most people, the reason why I use daily is because most people actually do look at daily, but we'll look at weekly. We'll look at over 5 years. And weekly, by the way, is usually a great time to look at when if we keep going down, and it could. RSI right now is at like 41 on the weekly, 40. You can see like even here in the bear market, when it got on the weekly down to oversold, it bounced. COVID was an exception for an exceptional event. Catalysts will always trump technicals. And so, alien invasion, of course, yeah. But you can see, look how many times it bounces off cleanly over multiple years and rarely even gets to that point. There's another example. And here, remember what happened in 2008? Great financial crisis. It went below, not for even very long. And it kept going down anyway. This is divergence. Monthly, we'll look at that too, although I think that's a whole lot less useful. I don't even have that on here. 1 month. Okay. That's how little I look at it. There we go. Yeah, monthly. And it's probably going to be close to neutral, but it's even still bullish. But yeah, I don't think very many people look at that one at all. Weekly can be useful. Daily is actually the most useful. People look at hourly. I don't think hourly is particularly useful either there in that time frame. But let's look real quick at Tesla, because that's one name that we're going to talk more about today. And it's important to note RSI, like it's not a firm rule, especially in individual names. Catalyst can bring it down. And if a company is already oversold and then the market keeps dipping, it can keep dipping right along with it. So this is actually where the weekly and then even the monthly can be more useful in individual names, not on the actual index. And so Tesla's down at like 20. But if you look at its history, let's look over 5 years. There's plenty of times where it goes below this. So
Tesla's
don't be shocked
currently,
there. Now let's look at the monthly, and I expect there's maybe one. Yeah. All time. Yeah.
Tesla's
So
currently
yeah,
215.
not often on that, but yeah, it's so RSI and on individual names. I find it very useful if that's the only thing that's dipping. There's not a and it's there's not an underlying catalyst for it. It's just people are selling it off. That's a good indicator for a turnaround. And I prefer it really on the market itself, on the S&P 500. Nasdaq, by the way, we'll pull up Nasdaq. It's not as firm with this. So let's do over the last year, the daily. We can see actually it's right there at oversold, just slightly past 28.50, so slightly oversold. But you can even see here, like where it bounced off. Here it was slightly below, I believe, at 29. You can see in a bull market, that tends to be what happens. Now, the question is if we're still in a bull market. Right now we are. Here's where we were in a bear market. It went below. And then this was being way overextended in a blow off the top bull market at the end of the bull market. It can do that too in bull markets. So it just does things more extreme each time. So one of the catalysts and one of the reasons that is actually very valid, I don't think it's 2022. One of the reasons why it's very valid is this pullback is because a lot of GDP estimates, which were bullish, and this is Atlanta Fed, this is just one of them, but a lot of people are listening to this. They had a massive revision. You can see where it was a little over 2% to now negative 2.5% for GDP for 2025. So does that scare you, Tevis?
A little bit, but I mean, and we can talk about just thoughts in general, but you know, my fear is not so much that like we get like a flash crash like the yen carry trade or something that even lasts a couple of weeks. Like I remember the COVID dip in March of 2020 was a couple of weeks, and then you saw an immediate recovery based on that. My fear is mostly that there is still uncertainty looming around how long these tariffs will last, if they're even going to be prolonged, and what the economy is going to look like by like to this chart, like what the economy is going to look like to the end of the year. And I think that is what's going to be holding back the market from, bringing it back, probably not to February 19th levels, but at least bringing it like retracing from where we are right now. And as a result of that, even to exacerbate it a little bit further, I think a lot of large funds are going to rebalance and maybe shift to other more defensive positions. I mean, maybe you see like similar patterns to what we saw in 2022. Like they go into mega caps and they go outside, like they go risk off more because of that uncertainty. I think everybody, like the major movers in the market, institutions, are probably in somewhat of a holding pattern right now until they get more certainty around, hey, what does this future look like over the next 12 months? And then they can determine what they want to do with that cash. And so even if we do see a retracement, you might see something that's not equal across the board, because essentially people are using they're leveraging this new data that they have, this new information, and they're making decisions based on it.
Yeah, the GDP. So part of the reason why it's down is tariffs for sure. There's been a lot of spending ahead of tariffs, which is actually a drag on GDP. The other factor is government spending. That's a big factor there. Doge and government spending are causing a lot less spending. Like a lot of the GDP growth that we've actually had under Biden and really under Trump in this first term were due to government spend. And as the government is pulling back on that, that does have an impact on GDP.
Like government spend, like QE, you mean?
What's that?
Quantitative easing, you mean, or what? What do you mean?
No, like just even expenditure in general. Like if the government is spending a whole bunch of money, it's pumping up the economy, and it's A little bit
Yeah.
inflationary, but it really does have an impact on GDP as well. So
Yeah.
as government is cut, revenue spending is cut rather, then that has an impact on GDP. So this right here, the hardest thing is we could find out tomorrow. Okay, no tariffs on anything, guys. Just kidding, haha. And I'm for real this time. It's like, okay, great. Well, then this will be revised back. And then a month from now, we might be like, well, actually, 50% tariffs on Canada because Canada sucks. It's like, well, okay. There's a lot of uncertainty in the market. And that's why I think between this right here and between that uncertainty, which is not going to clear up,
Yeah.
over the next couple of weeks, we're likely due for a rebound and a bounce on the S&P 500, which will help most stocks, not every stock. Tesla may continue to go down, for instance, by itself. But I think that as long as there's this kind of uncertainty in the market, we might hold flat at a certain point and just, kind of fade this rally, or not rally, the stump. But I don't think that the dip is over until that really clears up. So we'll have to see. Now, the other thing to keep in mind is the typical definition of a recession is 2 quarters of negative GDP growth.
Yeah.
Minus 2.8% is it's minus 2.4%. That's slightly better, I guess, than 2.8. They revised it slightly. I didn't catch that. That's usually considered a recession. Under President Biden, they revised that somewhat. There was some economists that it wasn't just necessarily a partisan thing. It's a weird thing to have a recession when it comes to GDP, and yet the workforce is stable. Workforce has shown some signs of weakening a little bit, but I don't know that we'll get a recession in the sense of negative GDP prints 2 quarters in a row and a lot of unemployment. We might, but I still think that that's not particularly likely, but that seems to be what the market is looking at right now.
Yeah. So, I mean, a couple things. And I want to bring this up as like a topic, what Cole brought up here, that this could just be a short-term play around, Trump trying to crush inflation or get the Fed to preemptively make a move and then roll back stuff. It could be. Absolutely, it could be. Because there's also like macro factors to consider on the debt and whatnot. And then the other piece here is that I'm so tired. I totally forgot my other point. But so it could be a short-term play. Yeah, maybe let's stick with that one, and then I'm sure I'll remember eventually. Do you think that it's a short-term play, Roy, or like I know the market is going to fall on the uncertainty regardless, but do you think that there is a wider piece here that this is being done strategically, or is it just that because okay, so when the Fed is talking about rate cuts, I remember back in late 2022, for example, like they can't really telegraph that they're going to cut rates because the market's just going to rally and like they're going to front run them. So they have to appear hawkish, even though they might be, leaning more dovish. That could be something that what we're seeing here, where he says, I don't care about what the market is doing. Like we have to take the medicine now and to fix it, more structural issues. And that could be earnest, or it could be a total like art of the deal type of play. So that's one thing where he could be projecting something externally that's different from the actual strategic aim. If this is something strategic where he's wanting to tank, the market for whatever reason. And then the other point here is that Doge is going to lead to a lot of like layoffs on the federal side, and some of those will be counterbalanced by the additions of new jobs across different industries. But that's also going to be one of the factors to consider. If people lose their jobs, they're not going to be spending as much. And yes, inflation is going to come down, but you're also going to have lower results in all of these companies.
Yeah, I don't think that we're going to get a recession. I do think, people have this idea of 4D chess when it comes to anything Trump or Elon does. I think there is a bit of truth to that. Scott Bessent, the U.S. Treasurer, he's done an incredible job communicating the plan. So the two things that I actually believe, and there's a lot that I don't believe. One is that there is an element of negotiation or hard negotiation that is within the tariffs, but I don't think that's all that there is. You can hear the way that Trump speaks about tariffs, and it's like Michael Saylor speaking about Bitcoin. It's not just putting on a show. He loves Bitcoin. Trump loves tariffs. So some of that's going to be around to stay. Like how much, I'm not sure. Like the piece that's hard with the tariffs is when you look at his first term, he had tariffs. Some of those remained under Biden as well. But the thing is, they were not instituted as erratically, and they were not instituted as aggressively either. So you cannot introduce this much volatility and this much chaos into the markets and expect it to go down well. So the second piece that I believe is that they really do want to get those 10-year rates down. Let me throw this up. We've talked a bit about this before, but in case somebody's missed it or you've forgotten or you just got distracted by Tevis's good looks, 10-year yield is you're going to try to deny it, but no, you can't do that, man. You're lifting, you're working out, you're mega billionaire. So, but the 10-year is very important because a lot of lending rates, especially mortgages, actually are inferred and tied to the 10-year yield. The Federal Reserve can cut rates all they want, but as long as the 10-year is elevated, real estate mortgage rates and refinance rates are not going to go down. They just are not, or not very much. And so you can see year to date that things are down somewhat, but let's look 1 year out. We can actually see we had a greater dip here around that first cut before election as well. And when this dip happened, Anthony Noto commented on it that it was some of the most robust, actually, I think it was a yin carry day. It was some of the most robust interest that they'd seen in the mortgage side of the industry for SoFi. We see a headline here. Oh, man, I didn't share the right way. 1 second. Let me reshare window. Still learning. Chris Patel shared this. I was looking for it while you were talking. This was from last weekend, but weekly mortgage demand surges 20% higher after interest rates dropped to the lowest since last year. And the more that this does, basically there's pent-up demand when it comes to refinance, when it comes to mortgage, when it comes to people wanting to sell their house. Last year was abysmal in real estate, and real estate is a significant part of the U.S. economy that's largely been frozen just because of incredibly high rates. Let's go out further than a year. Here's 3 years, and you can just see it's on this upward trajectory and trend. Of course, if you look historically, you're like, oh, those aren't too bad. But I mean, going back to 2008 is ancient history, honestly, guys. Most people were not in their homes back then, at least if you still have a mortgage. So if this inflects under 4%, it does several things. One is it opens up and unlocks the real estate market, which is good for the U.S. economy. Second is it's great for companies and countries in the United States that are trying to take care of some of their debt. So PayPal actually this last week ended up not really refinancing their debt, but they have a good chunk of notes that are due in the next couple of years. And they said, hey, rates are lower. They may not be this low for long. We'll see. We're going to go ahead and refinance. They actually had really good rates. Of course, they have a really good credit score too. United States has a lot, and I mean a lot of loans that are due over the next couple of years, and really not that many about 10 years out. So what they desperately need, because those loans that they have right now were at stupidly low rates, but as far as the yield, but if rates continue to be this elevated and bond prices are as elevated as they are, it's going to be very painful to kick that debt out for longer, which they desperately need to do. So I do buy the merit of there's a certain element of negotiation. And second, the United States needs this to come down, and they're willing to suffer great pain to go through it. And Scott Bessent, the U.S. Treasurer chairperson, he has basically said as much, even prior to this dip, that was the plan.
We're inviting Tanner on.
Yeah.
I know the nerd voted for him to join, so
all right.
I put it up to a poll, and apparently they want Tanner. But only if Tanner has a leather jacket and does a Terminator impression. I would love to see that. Actually, that might make the red day worth it, just slightly.
Once you've sent that link out to him, go ahead and throw this up too. We'll look at two other little charts real quick. So this is the CME group, their rate probabilities. This is actually a very good indicator, but it can shift really quickly. So this is zooming out to the end of the year. And initially, at the very beginning of the year, we were looking at maybe 2 rate cuts, maybe 3. Look at where we are from a month from here. 17% of people were like last month, hey, we're going to stay exactly the same, no cuts. Now, nobody says that. There's actually more people that are like, hey, it's going to get down to 275 to 300. And so, each one of these represents 25 basic. So 1 cut, 2 cuts, 3 cuts, 4 cuts. So we're at between 3 and 4 cuts. 5 cuts doesn't look out the window. And there's some folks out here that there's 6 and 7 cuts. Now, you don't want this to be true, because that means we do have a lot of people that are out of work, that the economy would be in shambles. That's not a good thing. We do need rates to be cut down, but yeah. But like just how much things have shifted. Like you can see one day ago, 20% to 20, almost 9% for a 325 to 350. These can shift in a hurry. And again, in a bear market, not a bear market, in a big pullback or on a big upswing, the market can tend to over-exaggerate and overdo things and ignore everything bearish or ignore everything bullish. And right now it's ignoring. It's like, I don't care about rate cuts. I don't care about earnings. I don't care about AI. I don't care about the trade. I just wanted things that are safe. Like even Apple tanked 4-point-something% today. Apple's seen as a safe haven. I think it's a lousy safe haven, but that's the way that the market sees it. And who am I to argue with the market? So this will not last forever. We're going to get a bounce at some point, but I think we need more certainty. Last piece is trueflation. Trueflation is not CPI. It's not PCE. I think it's usually a little bit optimistic. I'm glad we're not in Argentina, by the way, even though that's good for them. 1.39% on trueflation. It was up, back in January, around 3%. And so a lot of this is due to the efforts of Doge, despite tariffs. And by the way, tariffs don't tend to impact inflation immediately. These are more aggressive tariffs, more erratic tariffs than we've ever had in our history, I think. Somebody could correct me in the comments. But usually tariffs take about 2 years to fully price in as far as the impact on inflation for the consumer. They're not great. I'm not a fan of tariffs, but that's just kind of the way they are.
Yeah. Tanner, welcome.
I have breaking news for you guys.
Okay, what is it?
Okay, you guys want to see it? You ready?
Sure.
Got your leather jacket? Yes.
Share my screen. This is Kathy Wood's buys for the day. Tesla.
Oh, dude, I just posted this on X. Yeah, go ahead.
Robinhood sold 4.765 million shares of SoFi, which was essentially her entire position.
Yeah.
Crazy. Yeah, I just posted that on X.
Well, if you would have added me whenever I fucking said it, I would have been here by now. But you invited me, and then I listened to Roy's monologue.
All right, why are you wanting to demonetize us? We have no money. We have to work at McDonald's if you do that.
What do you mean? How do I monetize you?
Off with your fucking profanity, Tanner. That's how.
That doesn't demonetize anymore. Check it out. You can put swear words in your titles too.
By the way, block. Look at that. Yes, she got one right.
He's drinking.
one. I'll say two positive things on Kathy, because a lot of people tend to be pretty negative on her. She gets long-term macroeconomic things usually very right. The timing is wrong, but she's right on the trajectory. And 2, look at when she buys and sells Tesla. If that's all her fund did was just buy and sell Tesla, dude, she would be set. She would have like this sterling name for herself. She does great on that.
But like, I also don't, yes, she sold almost her entire SoFi position, but Tesla's been the bread and butter that she's made her entire fund revolve around. And if Tesla's at 220, then yeah, she's going to start selling completely out of smaller positions and go heavier in Tesla. It's the same as the rest of us, right? Like when the market is flying, we're looking for the Oscars and the Joe B's of the world. But when the market is crushed, we just consolidate to our biggest positions. Like it's just normal, right?
I have one question for you guys. Do you think that this news that we're seeing is positive or negative for SoFi? And I can add a little bit more context for the viewers. Potential rate cuts or potential lack of loan buying, and that's it.
Well, I don't think that it's lack of loan buying. I mean, we've
Yeah, why
seen
would there be?
them have deal after deal in the loan platform business. That makes no sense. Also, given comments on earnings from not just them but other lenders as well. And I mean, rate cuts are really good for SoFi. It's worse to get rate cuts because of recession if we have a recession, but ultimately, like rate cuts are great. So, yeah, her selling or buying, it's meaningless for SoFi. But yeah, it's not shocking. Like this is what she does.
Yeah, her thing is meaningless for SoFi, but do you think that the consumer could potentially be weak and then the loans would underperform?
Maybe.
Or lose interest in unsecured personal loans because they might be a riskier fixed income product?
No, I think if anything, especially if rates are going down, a lot of people who are up to their eyeballs in debt are going to be desperate to refinance. And if the low rates are available because 10 years going down, because the Federal Reserve is cutting, people are going to take opportunity of that. So it's actually be a really good thing, at least for a little while, unless something breaks. And I don't know that something will break. So I would say right now, like this is actually bullish for SoFi, but not like super bullish because there is an element of caution. And I think, yeah, I mean, Noto tends to be pretty cautious anyway. He's not going to put SoFi as a business in a position that if things do break and fall apart, that the business is just going to go belly up. He's not going to do that. So they may intentionally, and it would not shock me at all, slow their roll on lending for a little bit, except for the loan platform business, which is the beautiful thing about that for SoFi, because there's zero risk to them. They can be like, oh, so we have these contracts to fill this amount. We will do all of that, and we'll see if we can drum up more too. So I'm not really seeing. There could be more downside with SoFi. I'm not buying more. I haven't bought more. I probably won't buy more. We'd have to get to really silly amounts to buy more. But if I had no SoFi, I'd be very interested right here.
All right. Thank you, guys.
Thanks, Tanner, for joining. Cool. Sorry, I'm just making this post.
Your cool sounds sarcastic.
Give me a sec. Yeah. Does anybody? Yes, Tevis is buying more at 14 on Friday, unless I roll that out, which I can. I can roll it out and down for like 2 or 3 weeks from now, and pretty much have flat, like maybe a slight net credit. Roll it out and down to like 13.50 or 13. I should probably do that instead, right? I shouldn't take assignment 14. I mean,
if you're able to roll and it doesn't cost you much, then maybe roll. Unless you really want to add more. Like when you were selling cash equivalents at like 17 on SoFi, I was like Tevis. But I know that you like the money that you're investing in. Long term, that's going to be fine. That'll actually be great. Like 5 years from now, when SoFi is like at $60, you'll be like, sweet. I wish I bought more at 17. And you're not investing money that you need in the next 5 years. So, but somebody else doing that, I'd be like, dude, what are you doing? Myself, like I ended up, I have a much smaller portion of my swing portfolio than usual, and it's all in HIMS right now. So sold some cash securities, sold covered calls aggressively, timed them both pretty well. So, but it's a very small amount. It's not substantial. So let's maybe go ahead and start looking at questions. Are you going through questions and starring them?
I haven't seen many questions, but people can ask questions.
So one of them I saw was, what's a silly price on SoFi in my estimation? And also, what's my average price? I'd have to look. Actually, I can look right now for my average price. Well, I'll just look at my largest holdings because I got SoFi in several different pockets. And I know it's close to that.
I wanted to
7:29.
show.
So we're at 10:66 after hours. That's nice. Wow, down another 4.39% overnight on SoFi. 15% down today.
Insane.
Nice.
That's insane.
Sadly, I have a lot of leaps. Yeah, those are not doing well. I'm still actually up somehow, but that's because I was buying them at $7. A silly price at SoFi is $7. Like that would be absolutely silly and ridiculous. Is it possible to get there? Anything's possible. Is it likely? No. My guess last week, how low we could go on SoFi was $11. We're actually below it, so we can always go lower than expected.
So this is Kathy's sell since Tanner came and brought it up. Funny enough, SoFi, she had over 10 million shares this time last year. And as of last week, she had about 4.8 million shares, 4.9 million shares. And she just sold about 4.75 million shares today. So yeah, she basically has, like, the chart would be down here somewhere as of right now. So she's been slowly sort of selling in chunks. But now she just basically sold off the entire position.
Yeah, I did that with Accelera and Enphase, and ironically, Enphase is one of few names that's up. It's been up over the last week. In a recession, and if people expect a recession, usually energy is a pretty good play too. And Enphase was ridiculously sold off, like it was just stupid. But I have a higher conviction in PayPal, so it made sense to rotate that money at the time, and also in Robinhood for that matter. I've been buying the dip on that too. Man, there's a lot of names selling off hard after hours too. The S&P 500 is down 3.28%. NASDAQ's down 4.75%. Aha, PayPal is outperforming it, negative 4.19%.
Insane.
In any other day, like, man, Nubank's down 7%, HIM's now 7%. It's really cooking after hours. Tesla down almost 20%, including the overnight.
Oh, was it in overnight 20%? What the heck's going on?
Yeah, it's down to 212. It's lost another $10 overnight.
It's crazy.
It can't. It honestly, like, usually near the end of an event like this, it's kind of like a blow off the top, but the opposite. It wouldn't shock me in the overnight market to see Tesla fall like below 200 over the next couple of nights and then rebound. But I honestly think Tesla can still go lower quite a bit. I think Elon has done some brand damage. Like, some of it would have happened no matter what, just because people like to target Elon. But he's invited some of that himself too. We've talked about it in the past, but
did you see the hacks today? That'd be also interesting to talk about. The hacks, the Twitter attack.
Yeah. You want to throw that up? Or I think I shared a chart with you.
Did you?
Yeah.
And now, so I will start bookmarking some questions. We're only 48 minutes into this. We have almost 500 people here. So yes, enjoy this group therapy session.
I'll throw this up here.
Yeah, so this is Twitter outages reported in the last 24 hours. Well, no, the thing that I want to put up is the thing that I shared with you guys around the Ukraine thing. Yeah. Do we want to play that clip? It's 20 seconds on this interview, the Fox interview.
Yeah, that's fine.
I haven't even heard it yet. I haven't seen the interview. I just shared the clip, but hold on. Let me throw this up and then we can listen to it together. All right.
There was a cyber attack on X today, which shut it down and may have been foreign sourced. Yes. It's a big story. You want to give us a moment on that?
Well, we're not sure exactly what happened, but there was a massive cyber attack to try to bring down the X system with IP addresses originating in the Ukraine area.
There was a cyber attack on X.
Roy, thoughts?
I mean, I don't know enough about it to know if I expect, not like a VPN, but something like that would be enough to redirect. Plus, there's Russian troops in Ukrainian territory and some folks from other countries as well. I don't really like him, trying to pin the blame on Ukraine. Like, is it possible? Sure, but
I mean,
yeah.
I don't think he said they were behind it. He just said the IPs were coming from that area.
That fair enough. Yeah, I
close enough association, I guess. You don't really need to,
but it does seem very deliberate and targeted towards Elon. I know they made some comments on George Soros, blaming Soros for Tesla coming under fire. I'm like, dude, probably yes, but you have yourself to blame too. So, you need to point the finger at yourself too. Whether you think it's like, hey, fully justified what he said, what he's done. And of course, the market exaggerates it. Mainstream media exaggerates it too. Nazi salute. Didn't happen. It's just a super awkward guy, but he's made a lot of comments that really did. So, yeah, glad you guys are here. This is kind of the one thing that we're for. What do you think, Tevis? And then we'll look at Anthony Noto comments, and then we'll look at
Anthony Noto talk today.
Well, comments on Twitter. They're weird.
Weird.
They're really weird. Well, we'll see.
I haven't. This is new to me, guys. This is Kyle's fan here. Welcome from Kyle's channel. Thank you for being here with us. Consider subscribing if you enjoy this.
Yeah, Palantir logo.
You have the little racket behind you too. It's,
that pickleball racket. That's Palantir.
Yes. Should I share your screen or yeah?
Yeah, you can go and do that. So 2 interesting comments from Noto.
Fresh horses.
This one, March 8th, so a little bit ago. It's a whole new day. And the fresh horses we ride. Thoughts?
Fresh horses we ride. Fresh horses. Is that lyrics?
If it is, I don't know, man. I don't know much in the way of music, so.
Fresh horses we ride. Fresh horses.
So,
ride.
First, is this different cryptic Noto than typical?
Yes. I think it's like a Noto expression, honestly. So I just Googled it, and I got here. I gotta hide some personal details here.
Hide my screen. There you
go. Yeah. So I got this. I saw this post. This is. Do I have any personal? This is LinkedIn, and homeboy here, 3 years ago, says, as Anthony says, "Fresh horses we ride." So this is not the first time he has used this expression. This is actually apparently an expression that he has. So, but what does that mean? What happened 3 years ago that he used it back then?
I think Lisa's speculating that he has a new wife, but I'm not quite sure if that's what she's saying.
That would not be a great analogy if
no. I think it's something new, some new product, and so it's a whole new day. I think alludes to that too. Now that event, and somebody said in the comments, a couple of people actually, Francois said crypto, and of course that was the day of the crypto summit. That was, or it might have been the day actually of the starts with an O. Help me out. That's over in charge of banks regarding crypto.
OCC.
Yes, thank you. The Office of the Comptroller it had said basically like, crypto, thumbs up. And so Noto posts, it's a whole new day, exclamation mark, fire. Fresh horses we ride could be further indicator of like, hey, we got new legs. We got a new set of legs. There's new things happening. We're ready to relaunch that crypto invest platform as far as the crypto fairly soon. Maybe there's a few regulatory things they need to do or tech things on the back end. Could be something different, or somebody else said in the comments, Army lacrosse. Maybe, like he's a sports guy.
So this is from May 2023. He says, love this quote. If there's anything I focus on every day, it's been point down on getting, I don't know. It's a self-imposed, unrelenting pressure that can only be extinguished by doing everything in your power to make it happen, blah, blah, blah. Days become weeks, months, years, and 50 years later, it feels like no time has passed. Fresh horses we ride. He likes to use this expression. Apparently, Gemini says it can be interpreted as a metaphor embracing new beginnings, moving forward, and seeking out fresh opportunities or experiences. So that's your fortune cookie, guys, for the day. Yeah, maybe new product line. I would love to, have them introduce crypto. Keep in mind the OCC decision was only like on Friday, right? So it's still, I know it seems like 2 months has passed because the market's been massively down over the past couple of days, but it could be that within a week of the OCC decision, they say something about crypto that's not outside the realm of possibility at all. I mean, in fact, we're expecting them to. I made a video on Friday and I was like, hey, like I hope SoFi responds. And so, what was the other thing that he said? Something about new beginnings. The other, like the tweet that he had immediately.
It's a whole new day.
Yeah, it's a whole new day, fresh horses. Like it's like the same theme, right? Like he's excited about something.
JMac says it's a battle cry for resilience, persistence, and continuous momentum military phrase. Could be.
Where is that from?
Very recent, 7:56 or 8:56 your time.
It's a battle cry for resilience, persistence, and continuous momentum military phrase. Yeah, if it is crypto, that'd be great. I think the meaning is we're in a great shape. We'll get through this just fine.
Oh, for sure.
Yeah. Like maybe Noto starts buying shares again. That'd be great. That'd be amazing to see. Hope we get crypto back in Q1. Absolutely.
So that's the silver lining of Anthony Noto and Team SoFi being so cautious with guidance.
Yeah.
That they usually bake into like absolutely terrible macro. And last year, they were really close. Other than the recession, that didn't happen. This year, they were very conservative as well. It's like, dude, what are you guys doing? You said it's the most exciting, most bullish macro since you've been part of SoFi. I mean, they might be right on both sides of it. So like long-term bullish, short-term things are painful. So we'll have to see. But there are some companies like if we have a massive recession, I don't think we will, but if we do, we have a long bear market and things break in the economy. Some companies are going to be in big trouble. SoFi is not one of those. I don't believe. Now, they've not been through a true recession, so we'll have to see how they fare. But I can't imagine things being worse for SoFi specifically than have your entire business frozen, which is student loans, and you have to reinvent your entire business while the economy is shut down and emerge stronger than ever. So we're in good hands with Anthony Noto. If you're a SoFi shareholder, if not, well, maybe think about buying the dip.
You could argue absolutely that they have not been through a real recession, but they have been through some pretty tough macro years for their business, and they've shown they could persevere through that. And so, I mean, look, somebody asked, Tevis, say you had no stocks, what would you buy in this dip? The same shit that I own already, man. Like I own it for a reason, and like that's the stuff that I would be doubling and tripling down on. If I didn't have anything, I'd probably buy the same exact stocks. I would just get them at a deal at a great time to enter. I didn't buy SoFi because it was super cheap. I mean, partially, but mostly because it was a great company that was executing and growing. That still holds true to this day, regardless of what's happening in the macro.
All right, question. Let's run an ad and let's take some questions.
Yes.
Better than working at McDonald's, I guess.
It's definitely, way less financially rewarding than working at McDonald's. Alex losing on Saturday, bro. I lost. I will DM you, Elijah, but I lost the most I've ever lost in sports gambling on this one. Very disappointing. And it was just a disappointing watch overall. It was like so not worth the wait. It was end of an era, I guess.
So you got some questions ready to go?
Should I be worried that I'm down 30% on SoFi? Nah, I wouldn't be worried. SoFi's been down 30% before. It has happened in the past. It is going to happen again, even after we bounce back, because that's just the game that you're playing. If you don't like it, go in index funds, and that's fine too.
Let me answer that one. Mm-hmm. Maybe you should be worried, and I mean that legitimately. If you are investing with money that is your own, so you're not doing macro or something like that, if you have long-term horizons and you don't need the money over the next 5 years, personally, me, I wouldn't be worried in that scenario.
Yeah.
If you are investing with margin, that's money that is not yours. If you are needing it to perform over the next 12 months, you should rethink your investing strategy. Absolutely, it should be concerned. At this point, it may be too late to do something. I mean, you do you. But yeah, if you have long-term horizons, it's your own money. In quality companies, they tend to go up over time. This will be no exception, even though it doesn't feel like it right now.
Yeah, exactly. Everybody's financial situation is a little bit differently, so do what's best for you. I think SoFi, like, what has changed fundamentally for SoFi since February 19th? Tell me what's changed in their business. We got great web traffic numbers. We got the fact that they're securitizing loans originated on behalf of others, and we got crypto approval. Sounds like negative 50% catalyst for me.
And more loan platform business. And TGL looks like that they figured it out, that the tech wasn't working, and that's actually going better. So yeah, pretty much everything good except for the stock price.
And I mean, you could argue that it's the macro is going to be much worse for SoFi, so on and so forth. But like I said before, they've proven they can operate in that macro. Am I buying more SoFi soon? And I'll also pair this with the fact that somebody also asked around options. I can't find it right now. Still selling options. Yes, I am still selling cash secured puts. Everything that I'm buying is through cash secured puts. I bought 100 shares of Tesla last Friday, which kind of a bad day now in retrospect, because it was down like 15% today. But yeah, got to exercise on 100 shares of Tesla. Next Friday, I have my SoFis, which I'll probably end up rolling. And then I also have HIMS for, I think, 2 weeks from now or 3 weeks from now. And I have them at 38. So we'll see if I need to roll those or not. I'm probably just going to let the time decay on those and then probably decide closer to that day. But I am getting assigned on more stuff, and I'm letting myself get assigned. I'm not rolling because I want to be owning these shares. And so, like for HIMS, I did 3 tranches at 60, 50, 40, and I collected about $15 worth of premium on those. And so I'm still good. Yes, my cost basis is higher than what the stock is trading at, but when you actually go with the premiums, you're pretty much what you're trading at. And then I'm writing like 38s and then 34s. So long story short, yes, I am doing the options. That's how I'm entering these positions in the first place. I'm not going to have infinite money. So at some point, it's going to be much more difficult for me to do these options. But this is why I'm also like I would love to take assignment of those 3,000 SoFi shares this Friday. But because I'm covering my downside because it can go even lower, then I might just roll them and see where it's at next week.
So if you guys are wondering if SoFi is going lower, it is because Tevis is doing this.
Correct.
Get ready for single digits. Dark mode Roy may be back this Friday, guys. Get excited.
Maybe back tomorrow by this point.
Honestly, yeah.
Yes. So
Jimmy's comment at 9 o'clock.
Jimmy's comment.
You guys think it's a good buy in now at 11 or wait? It's like 1068 right now. But I mean, if I own no SoFi and I was investing long term with money that again is my money, yes, I would be buying personally. If that's not you, or you're like, hey, this volatility, I can't stand it, don't do it. Just don't do it.
Don't do it. Don't do it. What will you do if SoFi goes back to 6?
Cry. Honestly, like I'll be real with you guys. Like you saw it last week, I was emotional. I wasn't like angry or anything, but frustrated for sure. We're humans. I do not make decisions based on emotion. I don't do that. But there are times when I do get emotional. If I see that, I'm gonna be really disappointed, really frustrated, kicking myself that I didn't take more money off the table with SoFi. As far as the leaps, I've not sold any shares, and I'll buy more unless something fundamentally has broken in the entire United States or in SoFi. Exactly. Try and buy.
I'm totally gonna put this on a T-shirt. Tom stealing it. I'm gonna put a heat map of the stock market, and I'm gonna say it's gonna be crying and buying on the T-shirt. So look out for that. I'm gonna make it after I come back from the gym tonight because I feel like it's appropriate. I had my Biden selfie mug when we fell in 2022. I still have that at my place. Do we continue to call tomorrow? Yeah, just look at the after hours, man. The U.S.
Well, so we maybe like I think we could have a couple more days of pain. We're with an overnight like tonight. We're closer to the local bottom. We can fall further, and I think that we probably will, but we're due a bounce. Like Robinhood right now, it's down 7% in the overnight, and wow, and 19.81% today. So it's down like over 25% today. That's insane. That is insane. Like that happens to trash companies that are speculative that don't get FDA approval. So turn it off and turn it back on.
Yeah. Yeah. I mean, if you want a mug, I think I have them on my store. Just click on my YouTube store. And I made them in these situations. In this case, it was Biden, but it's now I'm thinking about making one with the same heat map, and it's going to be Trump, and it's going to say, "Are you tired of winning yet?" Or it's going to say, "Crying and buying." It's going to happen. I need the money, guys. I need to buy more shares of things. Okay. Okay. More questions. Yeah, I mean, if you're on the channel, just click on the store, and then you can buy stuff. I do. I don't think I've ever sold anything on it though. Okay, cool. Let's go. Did you see Elon's interview today?
No.
Me neither. Okay, what if this is a 6-month downtrend and the market drops another 15, 20%? What will you do? High beta companies will fall another 40, 50%. Yeah, bro, like I've been through 2020, 2022, 2018. So like this is pretty standard stuff. If it's drawn out, it's going to suck in the short term. And then, I mean, I guess the question, what will we do when SoFi goes to 6 is I'm going to be disproportionately buying leaps relative to shares. So, $11, $10, $9, whatever, like shares. If we fall to like 6, I will load the boat on the latest date I can find on leaps on any stock, really. SoFi, Tesla, whatever. Because I think it's just going to be very great.
Yeah, I mean, I'd be buying a lot there too. The hard thing is like when you get a general market pullback, like everything is down, and like pretty much every name on your watch list, you're like, oh, this is a dream scenario, but you have finite money, unless you're Tevis, in which case you have infinite money glitch and you can just buy it all. But most of us, you have to kind of choose at that point, and it makes sense to rotate into those things that are your firmest conviction. That's why I exited 2 of my positions last week. It's like, hey, these are more volatile. I'm less certain on them. One of them has gone up since then, so you're welcome, Enphase shareholders. But yeah, I rotated a good bit more in cash. I've deployed some of that today, but I bought a lot of PayPal too. And yeah, it may not be the bottom. I would really, barring again another massive catalyst, several actually, I don't think we're entering the bear market as far as the S&P 500. That seems very unlikely given earnings. GDP, yes, it sure looks sour, but a lot of that is a product of that rush to buy before tariffs and also government spend. Those aren't like the worst reasons for GDP to look negative for a bit. We'll have to really keep an eye on the job market. If the job market really starts fracturing and coming unraveled, I don't think it's been as strong as it was intimated under Biden's administration, but it's not like massive recession and people are losing their jobs, and we're not that bad. And there are, again, go back to the beginning of this video with the 10-year. We didn't go through the DXY, but DXY has been good too. If you look at potential inflation, and we'll have to see not so much this week's prints, but next month's prints, which will actually backdate then to this month, to March. I think that we're going to see some softening in that, and that's not a bad thing. So we'll have to see. Can you put up Unflappable Fog's 9:07 p.m. comment?
9:07 p.m. comment.
Yeah. and this is, I'll open it up to us both, but he said, would you buy SoFi at 6 or Palantir at 20? Palantir. You see, like, look, Palantir. It is still higher than I would buy it here. I would not buy, well, let me check the after hours. Maybe it fell like 10, 20 bucks. It fell a lot today. And honestly, it was up way too much. Yeah, it's at set. Wow.
What's
Pull
that?
up Palantir, Tevis. Throw it on the screen.
Sure, Roy, I can do that for you. So, okay, let's pull up Palantir on the screen. It is at $76.
Do you want to know what it's at overnight?
What is it at overnight?
70.
It's at 70. Jeez.
Yeah, 70, 79 to be precise. If that holds, that's down 17.36%. That's insane. Still more expensive than I buy it. But at 20, I would be, I'd have to see what else is there on the market, but I'd probably be 90% Palantir again. That's the point where I'd just be like, this is silly, this is dumb. Or, you know, if something is horribly wrong with the company, maybe I'll do it differently. But there's a reason why a huge amount of my portfolio is in Palantir. It's probably close to 50% again. I did sell some. I took some gains. I have some underwater covered calls, but my most underwater covered calls, Tevis, $65 expiring in 2 weeks. So I'm like, this is awesome timing from my perspective. Maybe if I roll out, it's not going to be that painful. And if I might not even need to roll out. So that'll kind of be a double-edged sword there. But hey, when we were at $120, they were at 65 and underwater. And I was like, man, this is miserable.
Yeah, I mean, look, man, the entire market is going to be absolutely insane. Like, you're going to find deals everywhere. The funny thing about Palantir is that, like, the biggest drop in, I think the peak of Palantir was the day that Karp's book came out, and then ever since then, it was just downhill from there.
Yeah, I mean, it should have never been at 120. It just shouldn't. I'm a huge Palantir bull, guys. But bull markets will exaggerate during good times, during extreme greed, every bit of good news. There's not a lot of bad news for Palantir. There is not. People are like, oh, the Pentagon's cutting back 8% over several. Dude, that's good for Palantir. The government's cutting back spend through Doge. That's actually really bullish for Palantir, especially comments by Elon Musk and several others that are connected to Doge. And the way that government employees and senators are buying Palantir, it's really good. Oh, there's peace in Ukraine. And dude, they are already agreed to basically rebuild and restructure Ukraine once peace was realized. Nothing that has happened, very little. There's a little bit. Almost nothing that's happened has been negative to Palantir, but it should have never been trading at triple digits. It shouldn't have. Like, even now, I'd be like, hey, if I had all my Palantir here, I'd be like, I'm taking some gains. 70 is silly. It is.
Yeah.
Is it ridiculous? It's not as ridiculous as people think. I posted every once in a while. I'll post like Palantir's stock price. Let me actually throw this up. It's really.
Sorry, I'm trying to do something else. But yeah.
Okay, let me share this. I love things like this. X is actually amazing when it works. Today it didn't for a large stretch of the time. By the way, on that answer, real quick. That would be SoFi for you, right? Or would you buy Palantir at 20?
I mean, I think if they fell to that price, maybe both. I would not be opposed.
Yeah. He has seen the light, kind of.
Yeah.
Can you throw this up real quick while you're doing what? Okay, so I threw up Palantir's chart, which, like, man, I wish it was 73.81 right now. Robinhood, likewise, but the comments. So going to puke a little. There's worse days coming after all. Like, this is good for a sentiment read, guys. And it's kind of like, buy fear and sell greed. Tell me if there's a lot of fear here. Palantir was way overvalued. 40 at 50 is where it belongs. I would put it higher. That one's not ridiculous. Not sure how low it's going, but it's going to get nasty as blank. Going 15. 15. Palantir. If Palantir went to 15, I mean, SoFi is probably falling to like 3 or 4.
Yeah. Yeah.
Needs to be in the 40s. TBH, won't be shocked if it keeps up. It'll see 30s to 20s. Really? Can we stop bleeding? I've unloaded Palantir, great company, but could still go down a long way. Only 30 to 50% lower. It will trade in line with higher quality software peers. Sold at 90. This one's actually pretty good. I don't mind that one at all. Crying. It's, yeah, the Robinhood one too, by the way. A month ago, people were like, this company, there's still some bears, but people are like, this company can do wrong. It's going to 100, all these great things. Now it's trading at less than half that value. And people are like, it's going to 0 and it's a scam company. And that I think they had like a $28 million settlement that goes back to things back in 2014. They're like, scam company. And that fine's going to put them out of business. Oh, I see that you're not familiar with the almost $3 billion that Robinhood made in terms of revenue, or the massive net income that they put up just in Q4, just from crypto, mind you. Oh, crypto winter. It's like, dude, if Robinhood made $0 from this day forward for this year on crypto, it would still be a screaming buy at this valuation. Yeah. So sentiment is sour. That makes me want to buy the dip a little faster.
Yeah, I mean, that's how you can tell what part of the market cycle we're in, right? Like what is, I mean, it goes full circle to what we were saying in the very beginning around like extreme fear, extreme greed. The reason it's difficult to buy during extreme fear is because everything that you read online is that, you know, the sky is falling and cheap can get cheaper and all of this other panic. Like there's always good reasons, quote unquote, or good sounding reasons why the market is seemingly crashing. So that and the fact that everything falls all in unison. And so I'm like, frick, like, what do I put money towards? Because I can't buy all the dips on all the things that I want to buy. And so this is where a year like 2022 is great because it stays, you know, depressed for the whole year, but you just feel like crap. And so, yeah, I mean, it's nothing new. We've been here before. We sort of know the drill. It doesn't stop it from sucking. Like we're still human. But at the same time, like I'm looking to buy some extra stuff. Roy is probably dying at some comment he read. Or he's frozen.
Popcorn.
Yes.
My daughter brought me popcorn. She's like, hey, Tesla, you know, is down almost 20%. He's like, here's some popcorn. I'm like, dude, she's a bear. She is. Yeah. She's shorting Tesla.
Yeah.
Nihar, if this isn't really a bear market, just to warn you. Go back to the beginning. We talked about the definition of bear market. It's 20% down from the peak over the year. The S&P 500 and overnight, which doesn't really count, is just at 10%. NASDAQ, if this holds, would be technically in a bear market. Russell, which matters a lot less, is in a bear market, I believe. 30%, by the way, is crash. So this is a correction. Corrections happen in a bull market. Doesn't mean the bull market is over. In fact, we were overdue for a correction, honestly. It's kind of, like an eruption that is due every once in a while. You want it to happen. And then what this does is, in an ideal scenario, let's see, we've got 10 minutes left. So this will kind of top things off for you guys and give you some perspective too. This is not a bad thing. It's a frustrating thing. It's not a fun thing. It's not fun to see your market bleed, especially that's as aggressive as it is. But if things go well, and they may not, but if they do, and the market stabilizes and it starts going back up, this does several things. It gives us a higher low and kind of a baseline, a foundation to build off of. It takes a lot of greed out of the market. People won't be using leverage quite as much, at least for a little while. And so they'll be using real actual money. That's a lot more stable. Traders will be less speculative, and people, when they're buying, will tend to invest in higher quality names, which tends to be very good for the market instead of investing in the Jobies in the world. Like only idiots would invest in Joby. No offense if anyone has actually invested. That's a dig at Tanner, not you. This clears out a lot of the rubble. Back in pre-Columbian times, Native Americans, and actually even post-Columbian somewhat, Native Americans in the Midwest and the United States and also up into Canada, in the Great Plains area, there were not a lot of trees, and some of that's a natural habitat. But part of the reason why is they would tend to set low-level brush fires that would consume a lot of the thorns, the briars, and as a result, it basically made the Midwest and the I don't know if they call it Midwest in Canada or not, but Saskatoon, I think is how you guys pronounce it, Alberta. It made it basically a nature reserve, great for animals, great for berries, all sorts of things. And they were able to thrive. Had they not done that, you would have kind of like the forest fires in not in Canada, but in California, where they prohibited in a lot of places no cutting of forests, no cutting of trees. You couldn't even clear out the undergrowth. Now, you do need old growth forests, and it's a good thing, but they curtailed it to the and fought forest fires so much that when there were finally fires, and there's been a bunch over the last few years, they are a whole lot harder to put out, a whole lot more extreme, and a whole lot more devastating than if you actually had let those small brush fires kind of clear out a lot of the junk. That's what ideally in a bull market, this 10% correction does, is it clears out a lot of that underbrush and it allows growth to flourish. And I am optimistic and hopeful that that's going to be what we have. It's not a guarantee, but that's one of the reasons why this 10% correction does not kill a bull market. There's got to be a lot more.
Yeah. I think that is a good analogy. Yeah, I mean, this has been a therapy session for the past hour and a half. I agree.
Tell it all.
Let's see if we can answer one more question, then we can let Roy go to the Hood Weekly. Do you have any cash that you're still holding, Roy?
It's like 2 or 3%. It's pretty low. I was at one point between my hedge and my cash close to 10% because I took off all my swings from the table, and I've allocated a lot of that. Obviously, a little bit too soon. We'll see. Is it not Saskatoon? Like the way that the Saskatchewan?
It's Saskatchewan and Saskatoon's the city, and what were we saying? The Pacific? No, the plains. It's
Midwest. Like you guys don't call it Midwest. What do you call it?
The prairies.
Okay. All right.
New or SoFi? I think we've answered this before. I think SoFi for me, just to mitigate the risk of geopolitics that New has.
If I had neither, SoFi.
Yeah. Tomorrow up or down again? Down again for sure. Just don't look, man. Like my new job is keeping me really, really busy, which is kind of great for the market that we're in because I don't have a chance to even look at all. It kind of sucks for content because I also can't make a lot of videos. But yeah.
I should have just said Alberta.
Yeah, Alberta's a whole different province. That's fine. It doesn't.
Well, I know that they are. I was just saying that that's like the equivalent of the Midwest of the United States. It's just Dakotas. I couldn't name all the provinces, but like those two, I know.
Gosh, do I know if could I name all the provinces? I don't know. I don't want to try that online.
Like there's Nunavut, which is a new one from when I was in school.
Yeah,
I would be saying it wrong, but yeah.
Northwest Territories,
British Columbia, Prince Edward Island.
Yeah.
Alberta, Ontario,
Nova Scotia,
Quebec.
Yeah.
Saskatchewan, like little ones too. Yeah.
So yeah, that's something I didn't think we would be talking about today, naming all of the Canadian provinces. Tevis said, "Market down tomorrow." Financial advice. I mean, look, you impressed Cole with your Canada knowledge.
I mean, I grew up in Alaska, so I should know a little bit about Canada. We're like the 51st province. I know that there's not that many.
I can probably name a bunch of states. I don't think I can name all of them. I mean, depends on how much time you gave me, I guess, but definitely not all of them.
Yeah.
Maybe. I am so, yes. Did you forget the Newfies? You have Newfoundland as well.
Yeah.
shall we wrap up?
Yeah. Hood Weekly coming up. Also on my channel, or you can tune in to the two other guys too that are awesome. If you're a Robinhood shareholder, there's a lot that we're going to talk about. Maybe some macro as well over there too, but a lot of Robinhood news and upcoming events. I know today felt terrible as a Robinhood shareholder, but there are days like this. And honestly, I would be pretty surprised if we don't see a bounce by the end of the week. We might not. And again, I don't think that that means that we've hit the bottom yet. But we will, I think, get a reprieve at some point.
Yes. And I apparently have to work on getting my store up and running again. I thought I was just, people just didn't like the merch. I guess it's not even up. But I will be probably hoping to do a video at some point this week, and then hoping to buy some stock at some point, maybe end of this week or next week. We'll see how it goes.
All right. Well, thank you
Thanks,
guys
everybody.
for watching with us. Makes it easier to have a community, have a group, bounce ideas off of, hear perspective. We're all new in the market once, so we can learn from each other, no matter how old we've been in the market. So appreciate you. Thank you, Tevis.
Thanks, y'all. See ya.